Hey guys, welcome back to KTV.Finance. Today I want to talk about something big that just happened in the market. And honestly, this is a really important signal for investors. So here's the headline. The S&P 500 just closed above 700 for the first time ever. And at the same time, the Nasdaq just hit its longest winning streak since 1992. Yeah, this is a strong market. So what's driving all this? It actually comes down to one key thing: the situation in the Middle East. Earlier, there was a lot of fear because Iran had closed the Strait of Hormuz, which is a major oil route. That caused oil prices to spike and made investors nervous. But now, Iran announced that the strait is open again, following a ceasefire between Israel and Lebanon. And as soon as that news came out, markets reacted fast. Stocks went up, oil prices dropped hard, and investors basically started to relax. So let's break it down. The S&P 500 jumped about 1.2% and hit a record high above 7,100. The Nasdaq went up over 1.5%, marking its 13th straight day of gains, something we haven't seen since 1992. Even the Dow jumped nearly 900 points. So this was not a small move. Now here's the key reason. When the Strait of Hormuz is open, oil supply is stable. And when oil supply is stable, prices go down. Oil actually dropped almost 10 to 12% after the news. And when oil prices drop, that's good for inflation. Lower inflation equals better environment for stocks. That's why you saw sectors like airlines, cruise lines, and even tech stocks start moving higher. Companies like Boeing, Amazon, and Airbnb all went up. So right now, the market is basically saying, okay, maybe the worst case scenario isn't happening, and that's why stocks are rallying. But here's where you need to be smart. Even though things look good right now, this situation is not fully resolved. There are still conditions, and tensions are still there. So this could change quickly. Also, some analysts are already saying that the easy gains might be behind us, meaning the next move in the market will depend on earnings and company performance, especially for big tech. So what should you do? Don't chase the hype. Stay aware. Watch oil prices, watch geopolitical news, and pay attention to earnings coming up. Because right now, the market is pricing in optimism. And if anything changes, the market can react just as fast in the opposite direction. This is why I always say, understanding the news gives you an edge, because news moves markets. I'll keep you guys updated as this develops. If you like simple breakdowns like this, hit subscribe. And as always, stay smart with your money.